The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the April 2nd, terrific Thursday, hour 2 of the Trader's Edge. Hope that you're off to a great start of your day. Hey, how about a great start of your weekend for those of you that have tomorrow off? That's nice, huh? We've got a nice little 4-day weekend in front of us. Let's make sure that you and I, that we do everything we can to take advantage of that. Of course, the easiest thing to do is to always remember that what's talked about is a dream, and it's good to dream, folks. You got to be a dreamer out there. But then what's envisioned, well, that becomes exciting. And then, of course, what's planned becomes possible, but what's scheduled is real. And I want to thank you for scheduling your time with me. I really do appreciate it, and I'm here to serve you. I'm grateful for your presence, so feel free to dial on it at 877-927-6648. Of course, internationally, you can call us at 727-445-1044. Remember, if you've got a question, someone else has got that exact same question, so call in for them. That's called a random act of kindness. And that is absolutely the way to live. This is Terrific Thursday. Of course, it's Hotel California, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow up 100 points, straight out at 17,798. S&P is up 11 at 2,070. Composite up 19 points at 48.98. Russell's up 7.5 points at 12.59. The DAX is just slightly green. The FTSE's up 35 points. The gold is back $8 right now. Silver is off 32 cents. Priceline leading the charge on the way up. Dollar-wise, it's trading at 11.60. CarMax is up 5.80. That has some nice volume behind its move. That's headed higher. Tesla's up $4 and change. Netflix is up $3. Zillow up 2.82. Google is struggling this morning off $6. Arista Networks off 3.50. Newlink Genetics down 3.40. Nuvasiv is off $1.80. Kite Pharmaceuticals off $1.59. A couple of pharmas here, number of pharmas that are struggling. BioMarin Pharmaceuticals off $1.56 as well. All right, so where do we begin? Let's go take a look at what's going on inside the index ETFs. Let's try to get a feel here. Let's go take a look at the QQQ ETF. What do we know about the Qs? Well, key level here for the Qs today is going to be 105.70. Can it break above 105.70? If it can, then it will have rejected that March 26 swing point. If it can't and it trades with inside that swing point, well, then it doesn't tell us which way it really wants to go. It says it may want to go test the bottom at 104.24, but 105.70 becomes the key number inside of the QQQ ETF. What do we know that it did? Well, yesterday it had volume of 32 million shares going against what? 47 million shares. Remember, if you caught my show yesterday, and I hope that you did, we looked at the first 30 minutes of trading, and we looked at the first 30 minutes of trading, had all the volume in it for the day. Let me just prove that point here. Let's just go take a look at a 30-minute chart out here, because volume just simply dropped out of it, right? There was no selling whatsoever for basically for the rest of the day out here. And oftentimes in this case, the buying and selling really took place during that first hour and a half worth of trading out here. But then it just totally fell off the map out here, where it looked like at the open, if the sellers were going to really get things going, man, they had it going for the first 30 minutes. But that first 30 minutes going against the breakout from March 26 was even on lighter volume. Hey, here's the deal. Until this swing point is rejected, 105.70, it's not a real clear message out here. What we do know the message has been is that with regard to that swing point of March 26, no volume on the way down. We've seen the Qs move into it on March 31st with 30 million shares, and then yesterday with 32 million shares. That's going against 47 million shares. Sorry, ain't going to happen. Now let's go take a look at what's going on inside the IWM, the Russell 2000. What does the Russell 2000 need to do? Absolutely nothing. Because what did the Russell 2000 do? The Russell 2000 came down and tested that swing point by like 1 penny. The top of the swing point for March 26 was 122.91. It actually yesterday got down to 122.90. How does that work? Now, volume yesterday was 31 million shares. The swing that it was going into was 26 million shares. So At the close of yesterday, I was kind of like, well, that's interesting. It's pushing the swing point with volume. That says, hey, it could go down there. Doesn't have to. Right now, what the IWM is dealing with is trying to get back up to the swing point high. That swing point high is March 23rd. Now, that's only got 17 million shares out there. Was March 23rd a holiday? I don't think so. Kind of interesting. I don't know what March was. Being able to take out that swing point should be no problem. And, it had a downdraft out here. It had a sympathy downdraft. That was with 42 million shares. But that 42 million shares, folks, that was going against the 42 million share breakout on March the 12th. So I'll just kind of say that they kind of both negated each other. We know we've got a test of the swing point. It was rejected out here. We'll see what happens as the IWM probably gives us the bigger clue as to what's going on. So we'll watch 125.79 to 126.32. If it's approached with more than let me see, is that the actual high? 126.32. Yeah, by 1 penny. So we'll watch. 17 million shares is the number. You've already done 4.6. But as we just pointed out, the volume comes in during that first 30 minutes of trading. If it can, now look, the IWM already has a confirmed A to B equals CD to the upside, and that A to B equals CD to the upside takes you to a price point of 129.23. The reality is that's not where it would stop. It wants to go to 131.78 at a minimum out here. But and a double confirmation will be: can it get into that swing? Can it get above that swing from March 23rd? Do with more than 17 million shares. But so far, the indice that should be the one that would be falling apart, you'd have to say in sympathy would also be the Russell 2000. Now let's go take a look at the SPY, the SPY. What did the SPY do? Well, the SPY here is actually rejecting that swing point. 206.37 is the top of the swing point from March 26th. Now, that had 153 million shares. That was tested and rejected on Tuesday. That's right, because we're at Thursday. Tuesday, that was 126 million shares, was rejected by 153. Yesterday, it got inside that swing point with what kind of volume? Hello? Yes, light volume. 137 million shares going against 153. Yeah, it was increasing from the prior day, another 11 million shares. But the reality was it was light volume coming in the swing point that it was testing. If, in fact, the SPY, this is a perfect day, really. All the SPYs need to do today is close above 206.37. If they close above 206.37 and do it with increasing volume, then you're going to have volume off of the bottom. If it does it with less than 153 million shares, you're going to have a rejection of the swing point with light volume. Either way, today the SPYs win as long as they close above 206.37. Let's go take a look at the Dow Diamonds. The Dow Diamonds has been the struggling of the indices out here. Yesterday, actually pushing and closing inside that swing point from March the 26th and doing it with volume. That only had 6.6 million shares on that day. So we kind of have this market where we're not getting really clear signals across the board, no question about it. Yesterday, the move into that swing was with 7.4 million shares. The key level to be watching today is going to be 177.30. That's the top of that swing point. So far today, 1 million shares. If you close above it, you do it with light volume, you'll have a rejection of that swing point with light volume. That's what's going on inside of the Dow Diamonds. If we go take a look at the summation index for 3 of the 4 that we follow out here, you've got the Dow right now. The Dow, let me see what the Dow, I don't even know if it can pull that number off today. I don't have it written down. Let me do this here. Let me go see. Let me see what's going on inside the Dow stocks. This will help me out a whole lot. Yeah, so you've got only, 2, 3, got 1, 2, 3. Yeah, you got about 3 Dow stocks, Goldman Sachs, Microsoft, and McDonald's to the downside. So that says to me, as close as we are, probably if those 3 stocks, if all stocks close in the green inside the Dow, this price oscillator could get above the zero line today. But let's pay more attention to not 30 stocks out here. Let's pay attention to thousands of stocks, 3,000 plus stocks. The NASDAQ composite, okay, which has been a weak link out here, primarily because of what's going on inside the biotechs. Right now today, long and strong. If it finishes where it is, it doesn't even have to finish just where it is. If that price oscillator is above zero, it has a what I like to call a complex structure along the bottom, forming that bottoming pattern out here, and really doing no damage inside the market's only thing. We had 100% move. We had price come back in that March 11th time frame. That's all that went on inside of the NASDAQ composite. You get above that, and at least its message is long and strong. New York Stock Exchange, its message has been long and strong out here. ever since the trading session of March the 30th. Yesterday, nice little hammer candle just to kind of confirm its message that it wanted to be long and strong inside the marketplace. That's what the message of the summation indexes are providing to us, the price oscillators. So, you've got 2 of 3, and I'll go with those 2 of 3 over the Dow any day of the week out there. VIX index, if we take a look at the VIX index, it has rejected that 50-day exponential moving average. Today is day 5. I don't know how the market ends today. Shoot, all the sellers could come in at 10.19 for all I know. I say, hey, just wait till 11:01 when Basil comes on, just to give him that gift out here. And while Stevie is long and strong, don't do it while you're on my show. All you sellers out there, you're listening. Now the market doesn't really give a hoot as to what it is that I say out here. And, all we want to do is just come take a look at the trade signals out here. You don't close above the 50-day exponential moving average. If you're a seller, you lose the battle. It's really that simple. Markets kind of move sideways to higher when price stays below that level. Has for years and years and years and years and years. And I get to say it one more time, and years. Because I can tell you for the last 6 years, that pattern has been in place and is as solid as anything that is in the market. So that takes care of that. We've got the euro, Japanese yen. Let's go take a look at the currency pairs, both soft and hard. If we take a look at the euro, Japanese yen, it's up towards its session highs. Very difficult for the market to sell off while this carry trade, while this liquidity signal is moving to the upside. So this thing has to crater. Now, it's not like we've got some type of huge breakout here inside the euro, Japanese yen. We absolutely do not have that. Kind of similar to our market, is it not? Where we've just basically been moving sideways for, my goodness, 3 months out there. Yesterday's close in the S&P, pretty darn near July 1st, July 2nd's opening. This is Steve Rhodes with TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 83, S&P is up 9, Composites up 9 points as well. So during that first hour, I shared with folks, we took a look at the trading, one of the trading systems that I use out there. We were showing the long trade that I had taken this morning because of a pattern that actually we had discussed yesterday. So it's the same pattern. It was based on, however, this time, yesterday we were looking at a 5-hour chart. This morning it was just simply a 10-minute chart. Same pattern set up. You just simply fire away. Now, I did close that trade out, and I closed that trade out just under this 2064 level inside the ES mini. You know, when I take a look at these longer term, so the cool thing about the tools that each of us use out here is that they work on all different time frames. So we're really agnostic as to the equity or future or commodity or currency pair that we look at. That's really irrelevant to us when we take a look at technical trading. So that's pretty cool. What else? Boy, I lost that thought there. So, and it works on all time frames. Maybe that's what I just said. And so one of the tools that I take a look at, my apology, really multitasking, is that I like to use these horizontal trading range boundary lines. So we've looked at the longer term, the weeklies, to get a feel for what price has been doing with regard to the S&P, the Dow, Russell 2000 composite. Now, in this case here, the ES Mini, as we speak right now, is right up against a fairly critical level of support. Now, why do I say that? If you're watching, let me actually turn this off here. Watch this on Tiger TV. That way I can just turn a couple things off. We'll come back, and I will turn it back on. I'll turn it off here. Okay, so now as we take a look at it, here's kind of a clean chart. Now, I'm more focused on the upper boundary line, this diagonal line, than I am about the bottom. I think the bottom is probably a pretty decent channel line. This is nothing more than a price channel out here. And this was drawn in early this morning. This was drawn in before I went ahead and I got in. It was drawn in after I got in the trade. After I got in the trade, what I wanted to do is I wanted to understand different, because it was a 10-minute chart that I got in on the trade. And you can see right here in the upper left-hand corner, this is a 10-minute chart as well. Remember, the chart time frames that you trade, make sure that you really try to stay inside these, okay? You know, to be able to get your messages, to be able to manage your trade. And so as I was watching, so I simply drew this descending price channel, because the market has clearly been in a, there's been selling inside the market. And so we're seeing, I'm just looking for where's that change in trend. So I knew that coming into this level right around here, about the 2060 area, was an area of resistance. If price could break through there, which it did, the next area of resistance was going to be that primary trading range boundary line, 2,064.50 to be exact. We've had looks like 9 points of contact here, and that has acted as a significant area of resistance. Now, what price is doing, when you break outside of a resistance level, you want to see price come back and test it and confirm that it's a real breakout. So right now, that yellow diagonal line on my screen out here, this is a critical level for the ES-Mini to prove that it truly is a breakout that we have going, that is underway. If it doesn't, it gets back inside here, then we can start taking a look at retracements or other levels. If we just take a look at retracements off of this move. So I'm completely flat as we speak right now. It says, hey, price pulls back to 2,056, 2,052. Well, quite frankly, it's at 2,052. It's really 2,053 and a quarter level that I'm watching for to see if, in fact, if price pulls back inside this channel, as it's sort of doing right now, what I'm really looking for is what happens right there at that line of demarcation. If price pulls back, test that, rejects that and close higher, then all we're doing is setting up an A to B equals C to the upside, and we are seeing the beginnings of that change in trend, that bottom that actually came in last Thursday. We're just seeing that next move up inside the markets. If this 2053 level fails, then I say price can easily move back all the way down to the bottom of that descending price channel. Do I expect that to happen today? I do not. I don't see any indication of that at the moment of that happening. If we had the euro Japanese yen doing something different, then I would say, yeah, I could see that taking place all day long. But that's really not what we've got. What we've got is a market that's broken out above, and the S&P 500 is broken out above a resistance level. Now it's coming back to test that, to see if that acts as support. And if it does, then it releases the next piece of information to us. Question inside the den, Steve, do I believe that Netflix will fill that gap or part of it? Let's go take a look at Netflix. You've got Netflix, what is that, to the upside, to the downside? Where is it? Netflix is up $3. I trade out at 416. So let's go take a look at Netflix. Let's go take a look at a number of different tools. So here is the gap. And so the gap that Mitch in Boston is referring to is the gap that is between the price level of 401.87 to 348.80. And it looks like that's a strategic pause. You'd almost think I knew how to do that, just to keep you baited to come back after this breakout here. Mitch, we'll go answer that question when we get back from this next break. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 67, S&P 7, composite is up 5 points. Let's go back to that Netflix question here. And the question is this, do I feel Netflix will fill the gap or part of it? And when we take a look at Netflix, and the answer there is I don't know just yet. Now, the reason that I don't know is because we're waiting for a test. That test is going to be, and you can see when we take a look at Netflix, let me draw this line across my screen as well, both the high and the low of this candle session. So Netflix had a huge breakout. In fact, let me do this here as well, just to clean it up just a tad. Let me turn these moving averages off. We can turn this stuff back on. Okay, so now as we take a look at Netflix, we're going to first answer this question by trying to understand what's happening with the gap. Remember, the gap is nothing more than a breakout. A gap is nothing more than typically a wide price spread. In this case here, it's a combination of wide price spread and accelerated volume. The problem with the gaps that most people have, well, you and I were visual, and so when it comes to gaps, what people tend to do is they tend to forget to fill it in. Here is the actual candle session for Netflix. You know, if we just take a look at it, and it is about as wide-ranging as you can. People, you know, there's gaps, and sometimes, and look, I used to be as guilty of this as anyone out there. That all of a sudden gaps were like scary. And gaps are not scary. Gaps are absolutely your friend out here. It's wide-ranging bar. In this case here, wide-ranging bar and accelerated volume. Now, ultimately, to answer Mitch's question, what you'd like to see, and you'd like to have the opportunity, is for price to come back to the breakout area. That would be the bottom of the gap, or that would be somewhere inside that January 20th candle, somewhere around $348 out there. And you'd like to see it do it with less than 6 million shares, most certainly less than 9.5 million shares. But here's our problem. Price has been trading into the top of that gap, meaning the January 21st candle. What you like to see is you like to see the bottom of that tested 3 times to let you know that, no, the answer is it's not going to go fill that gap, or at least it's not going to do it right now. And that is a test of 401.87. We don't have that. We haven't had that. And so, therefore, we really don't have much of a conclusion. What we do have that would be somewhat conclusive, and I would see why Mitch would answer the question, some part of it. Now, I haven't done this, but let's go find out, is the A to B equals CD pattern. Because I can absolutely make the case that there is a confirmed A to B equals CD to the downside inside of Netflix. Because the B point is the March 10th trading session that had 2.5 million shares. It was taken out with 3.8 million shares back on March 16th. That A to B equals CD to the downside, which is still in place, 1-to-1 takes you to 399.46. That says at the bottom of that trading session here from January 21st, that ought to get tested. So, Mitch, until we see the 401.87 level get tested, I can't answer that question for you. But 3 tests of that area and a rejection on lighter volume, then the answer is no. A close inside 401.87, and then the answer is yes. And the question is going to be, well, where would it go to? I can just give you different price targets, 385, 366, and then finally that 346 level, 346, 348. That would be the ultimate buyout there. So that's my view on Netflix. But feel free, Mitch, type in another question there if I didn't cover it for you, or that just simply brings up an additional question. Now, and with regard to Netflix, I start putting some of the other tools out there like moving averages. It's in the bearish formation of moving averages. That says to me there's still more work inside of Netflix to go to the downside. We had the TAS market profile box. It's down below support. That says it's also got more movement to the downside, and that says that 401.87 is likely going to be tested out there. I've got another question here inside the Tiger's Den with regard to gold, it looks like. Let me see. Let me put up the gold chart. It says, Steve, what do you make of gold being down with a significant dollar decline today? Okay, let's first answer that question. Let's take a look at this pattern here. On my chart, if you're watching this on Tiger TV, the top portion is the gold contract, continuous contract. The bottom portion is the GDX. I don't need these lines out here any longer. The bottom portion, excuse me, is the U.S. dollar index, only inverted. Now, the reason why it's inverted is to really match the question that Mike Kay in the Tiger's Den has, which he's saying, hey, the dollar is down. The anticipation is when the dollar is down, gold should be up. So I've inverted the U.S. dollar index to show that when the U.S. dollar index on my chart is actually moving higher, it means the dollar is weaker, and therefore the conclusion that metals ought to be moving up. Here's what we can say about the correlation between the U.S. dollar index and gold. If you just simply go back to December 24th, 2014, we watched the that's the S&P. God, Lord, see, no, it's a gold contract. Okay, it's a gold contract. We watched the gold contract, the top portion of my screen, scream higher in light of the U.S. dollar index getting what? Getting weaker out here. So that correlation didn't exist. That didn't really stop gold from going up. We have seen that on numerous occasions where the U.S. dollar index and gold just truly separate from each other. So I would say, to answer that first part of the question, let's not get too hung up into the correlation between gold and the U.S. dollar index. And instead, trade each of those respective of their charts out there. Okay, so that's the first thing. Now the question is, seems like it would be up near the 1220 area, challenging. So I think we've seen enough of this chart, at least with regard to the correlation of the U.S. dollar index and the commodity, to say not so fast. Here's what gold is doing, which is what it should do. Gold broke out yesterday above this yellow squiggly line. It is a moving average, and I'm not going to tell you which moving average that is. But what I can tell you is that once price closed above that yesterday, that signaled to you and I that there was a breakout underway inside of gold. And so Mike Kay has it correct. And there was some nice volume in that move yesterday. All that gold is doing right now, which is what I wanted to do, is to test this 1196 area, 1196.60. Now, it's a moving average, so it changes as it gets different pricing information. If gold can close above this level, then what I would say to you, Mike, is that the move yesterday was real. If it doesn't close above that level, then it's got more sideways action or something else that is going on out there. So right now, just like we were taking a look at the ES Mini coming back and testing this level of old resistance, we'll see if it can act as new support now. Gold is really just doing the same thing. It's just a different area to watch. It's really no different than looking at the VIX index, paying attention to the 50-day exponential moving average and watching to see if, in fact, that area can hold as support or resistance. So So, Mike, I hope that answers your question as well. And then I see another message, same on silver. With regard to silver, I don't apply that same moving average or anything, but with regard to silver, let's go take a look at silver. Let me switch this chart. Silver gave the best message of all with regard to forming that bottom out there. Let's go see where it's at from that standpoint. Let me switch over to workspace. I think it's in these daily charts out here. Give me a moment to take a look at it. I will pull up the silver chart. So silver, no, it's not. Oh, I grabbed the wrong. What did I do? Where is it? Hi-ho. So here we go. Here's silver. I think silver gave us that 7th wave count to the downside out here. Yeah, it did. So when silver was making its bottom, let me get my cursor out here. When silver made its bottom back on March the 11th, you got to love it, makes that 7th wave pattern out here. Should have been paying attention to it. I wasn't paying attention to it. Okay, shoot me. Now, what silver did, and we took a look at this during the first hour. If you didn't catch the first hour, folks, go catch the replay on the Trader's Edge show for the first hour on Channel 9 on Tiger TV. Now, the case of silver makes that 7th wave count to the downside. And what it had working against it is sellers were still in control. Take a look at the TAS market profile there. The point of control closer to resistance, that tells you sellers really were in control. When silver broke above that level back on March 19th, that was truly a change in trend that was underway. And we saw really an explosive move that very next day. In the case of silver right now, silver's still very strong. It's just having a little pullback, and it's pulling back to its daily TAS market profile level out here, right around the 1662-ish type area. So it looks to me like silver wants to definitely move higher, wants to at least get up to that fourth leg inside the Chapman wave. And I would have to say really what it wants to do, let's get up into those January highs out there. And that is its current message. If I look at the gold chart, gold did not make that 7th wave to the downside. I don't believe that it did. Here's the gold chart out here. And the gold chart, yeah, it actually ended up making this little 4th wave. You can see that market profile, also the same on the daily contract. But it looks to me like if I take a look at what's really going on now, gold actually says, because that's only made that first leg up, gold could have a lot further to move to the upside. So right now, at this stage here, I'm going to say that gold has broken out until we see a true failure of that 1196 area. Mike, I'm going to answer the question. This is what we're likely to see. I wish I could guarantee it. I wish I could guarantee a lot of things. I can guarantee if you go to a sushi bar with me, you will have one heck of a time. And I really was going to use heck of a time out there. That's one thing I can guarantee. You'll have foods that you've never tasted before, and you'll be like, how have I been missing this my whole life? In any event, we have a full moon that's coming in on Saturday. And full moons have an impact on gold, and I can't tell you why. What I do know is that it does. And those moves are initiation moves. Now, it's coming in on a Saturday, which really sucks because gold isn't traded on Saturday. In fact, it's not even going to be traded tomorrow out here. And so it doesn't open back up until 6 o'clock Sunday evening out here. So here's what is likely to have happen. This is what the charts are communicating to me. Right now, let's assume gold just kind of hangs out this 1197 level. Came back and it tested support after a confirmed breakout the day before, after a test of a swing point high back on March 31st. It looks to me it got the full moon, and it becomes an initiation move to the upside out there. I wish I could guarantee that. That's the way it looks like. That's what it looks like to me on the stock chart out here. Here's the deal. If we come in on Sunday, Monday, and gold is moving lower with conviction, shoot, that initiation move is to the downside out here. I do not believe that is the case. And the reason I don't believe that's the case as well is because commercial traders, the presumed smart money out there, and they are, quite frankly. I think it's more than just the presumption that goes to them. They've been pairing their short positions, so they're getting ready for a move higher out there. I only wish I could find a way to use that data to find a bottom signal out here. I just know that it carries with it a very strong message. So I hope that helps answer the question with regard to Goldilocks as well as Netflix, as well as what's going on inside the ES Mini out here. Now, let's go take a look at a couple things that are moving out here, and feel free to type in any other questions inside our Tigers Den, and you are very welcome, Mike. Let's take a look at AZO, AutoZone. AutoZone down $4. Whoa. Now, you don't get to see that every day where your trading platform, which was the e-signal, just closes altogether. So I'll just simply restart it up here. Just start your engines. Yeah, there's no race or anything. Well, we're coming into May, right? May 1st. No, we're into April. I'm getting way ahead of myself out here. Okay, come on. Now, I always have a backup. I can go to my other Ninja Trader charts out there, so that's no problem. Let me just see if this fires up out here. Maybe I had a couple things, too many things open. So hey, what are you doing for the weekend? Just kidding. All right, so let's go out here. There we go. All right, so we're back in action. Now, I was taking a look at AutoZone. So when we take a look at AutoZone, let's go see what it's doing. It's down only about 0.5%. Come on. Oh, geez. Come on. Main menu. There we go. AutoZone. AZO is the ticker symbol out here. I don't know why it's acting slow. There we go. So we take a look at AutoZone. This is a daily chart out here. Boy, nice looking chart. This thing is up towards its session. It looks like all-time highs out here. It's on its way up to 704.91. It's 1 to 1 A to B equals CD. Pattern out here. It crossed the B point, which was from December 31st. That had 207,000 shares. It was crossed with 281. And 231 out here. So it's got a confirmed A to B equals C to the upside. Really not doing much out here. Well, 704.91 is the first mark. I'd have to say 741.73 is also in its crosshairs out there. Basil says, hey, it's at a 696 round number high. Ooh. That's so 696 even Steven out there. Thank you, Basil, for that. Now, those round number highs, let's go see if we can, let me do this here. Let me change workspaces for me. Let's go ahead and punch up AutoZone out here. So you like to see AutoZone. Now, Basil's the one. Basil, touch on that during your show, if you would, for folks so they stick around on that round number high out there, especially inside AutoZone. Basil has found that those round number highs can oftentimes mark significant tops. I don't know about bottoms out there, but I think significant tops. Now, what you always like to see is that happen near a pattern completion out there. And A to B equals CD pattern, the 1 to 1, and it's close enough to potentially having been complete. Okay, he says, or lows as well. So there's a great piece of information for each of us. Now let's go switch over to the daily chart. Just curious with regard to a wave count, where AutoZone might be. So let's go check that out. Hey, that's interesting as well. I'm glad we put this chart up here. So it doesn't have that 7th wave because it's gotten into that 8th wave out there. So pity on that. But so be it. But what it does have is it's got this little shooting star candle out here that acts as a little bit of resistance. And so it got that 4th wave or 4th wave. I've got 8 on here going to letter G. Same thing out here. So if we take a look at it, it's got resistance at that high. We're going into break here on, come on, baby, 2 trading sessions ago. So in any event, this is Steve Rhodes with TFNN. I'm going to let Basil do his work on AutoZone during his show. This is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 65 right now. S&P's up 7.5. Composites up 6. Russell's up 6 points. Gold's back about $11 at that 1197 level. So watch that coming into today's close out there, and then watch that again, that 1197 area come Sunday night. And see if gold starts moving. If it does, that probably sets up a pretty decent trade for you if you trade the actual contract out there. Otherwise, you got to wait for Monday morning out here. But, if gold's made a significant bottom, it's got a lot more room to run to the upside. If we take a look at some of the mining equities here, let's go see how they're pulling back this morning. Let's take a look at Rand Gold, GOLD. So yesterday, moving higher with 892,000 shares. Never got to the swing point. That's got 811,000 shares. So far today, pulling back with 300,000 shares. That's a bit more volume than you'd like to see. With yesterday moving with 900,000 shares, we only trading for an hour and a half out there. But that's what's going on. Rand Gold basically found resistance at its TAS box out here. So it needs to close above 71.60. Couldn't even do that yesterday. How about Gold Corp? GG is the ticker symbol out here. Gold Corp yesterday moving higher with 9 million shares. Today pulling back already with 2 million shares out here. And it's still inside the swing point high from March the 11th. That high is 1879. Really needs to clear that area, and I would say needs to clear the 1942 level. So no conviction, no real major conviction behind Gold Corp as we speak right now. And the volume, got to see how it is at the end of the day, but a bit too much volume. You'd like to have seen it on real light volume. Let's see, I got Freeport-McMoRan. That's just slightly green, but Freeport-McMoRan trades in the direction of the Aussie dollar out there. So when you're trading Freeport-McMoRan, what you're really trading is the Australian dollar out here. I used to have, I don't have enough. I'm not going to do that during the next 2 minutes out here and put that up on my screen. But if you're in that trade, go ahead and attach the Aussie dollar to that chart. Take a look at it, and you tell me what you're trading. You're trading Freeport-McMoran, or are you trading the Aussie dollar out there? Let's see, what else can we look at? Let me just kind of summarize and give you some things to look for today. In the case of the Qs, the number that it needs to close above is going to be 105.70 or 105.11 as we speak right now. That would be rejection of that March 26 swing point. It's not there. You close inside it. You can go test the bottom. You can certainly go move above the high, but you can easily go test the bottom. Inside of the IWM, it's got no testing that it needs to do. Its testing is already done out here. You got to watch the IWM as it gets into that March 24th level and see what kind of, actually March 23rd, which only got 17 million shares out there. In the case of the SPYs need to close above 206.37. They're at 206.45 today. It doesn't matter with what kind of volume. If it does on light volume, it's a rejection of March 26 on light volume. If it has got volume moving topside, you're coming off the bottom with volume out there. So that's the message of the SPY. In the spiders, in the case of the diamonds, it's got work to be done. It needs to truly close above 177.30, and it needs to do it today with, I would say, with some light volume, something less than 6.6 million shares. You're doing 1.2 million shares as we speak right now. That's one of the things you'll know. Those are four things to keep your eye on. VIX index, the 50-day exponential moving average is 1547. You're trading at 1483 right now. This would be day number 5 of a rejection of that level. That bodes well for the bulls. In case of the summation index, NYSE is already positive. It got back to positive yesterday. Today, you've got the NASDAQ composite. That's positive. What does that mean? It means the buyers are winning the battle. They're the ones that are in control out there. And the Dow, it's got a bunch more work. But stay tuned, because the master of the Dow and those round number highs and lows, he's going to be up next. That's our man, Basil Chapman. Have a great Thursday, great holidays. Best wishes to each of you folks out there. And I'll be back with you Monday morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.